Offer lifted. 25 bid.
Welcome to PriceSquawk.
Okay, trading exercise number 1. Trading naked is the name of the drill. This video will give you a quick overview on how to get set up and some of the goals of the trading drill. So trading naked means we are taking away our charts and any other indicators or visual input you have and just bringing up a trading DOM. For those that don't know what that is, that's a depth of market display, or also called a ladder. Some people call it the order book. So in the DOM, we are looking at the market auction at its most basic. On one side, we have the buyers with their bids listed on the left, and we also have the sellers on the right. In the DOM, this is the jigsaw DOM we're looking at, we are seeing the buyers and sellers working away at the resting bids and offers, or the aggressiveness of the buyers versus sellers, and the resulting price action. You'll also notice I have a volume profile on the left, and that's about as complicated as we want you to have it for this trading drill. The goal is to watch the information, or listen if you're using PriceSquawk, to this information and form a bias and take some trades. Now, the first time you do this, it might seem absolutely ridiculous if you're used to trading off charts or using some other hindsight indicators. A lot of numbers flashing at you. What does it all mean? That will disappear very quickly. Once you've focused in and watched this for just a number of minutes, you'll start to get an idea of what is going on. How aggressive the buyers are, how aggressive the sellers are, how much volume's flowing through the market. So we're going to use that basic market auction information to take some trades. We're going to do our best just this first time and try and make some ticks, as simple as that. And then we'll review our trades and see what is going on. How are we making ticks? How are we losing ticks? What can we improve on for the next session? This drill is performed by prop firms all over the world to introduce them to the DOM, but also to get them thinking about order flow and working bids and offers. And that's another point of this drill that I didn't mention, is we're not just going to be hitting in, and by hit in I mean entering market orders when we think the market's going up and entering market sell orders when we think it's going down. Try and work some bids and offers by placing resting orders at the inside market or just outside the inside market if you think you'll get a fill. And that's another skill we're aiming to improve, because if you can get filled on a back tick at the inside bid or offer, that can potentially be a free look for a market move. But more about that later. For now, just focus on working bids and offers, trying to take some ticks out of the market based on your judgment of conditions and where you think the short-term momentum is taking the market. And then we'll have a look at our review chart. So in this exercise, I'm trading the Bund. It's a great futures market for completing the trading drills on, as you're almost guaranteed to be able to execute a few round turns during each trading session. It's kind of a middle thickness market. What I mean is there's always a reasonable amount of volume on the bids and offers. It doesn't jump around anywhere near as much as the DAX, for instance, or crude. So you can get a pretty easy read on the order flow. Having said that, it doesn't mean it's easy to make ticks on either. So I'm not going to show you the whole trading session in this video. I'll do that in a separate video and walk you through some of the trades and what I'm looking at for justifying trades and forming a bias on short-term momentum purely from information you can get from the DOM. So we'll take some trades for the session, and then we'll look at our 1 minute chart with volume as detailed in the trading drill instructions, and see what we can learn from our trading session. One final point, do these on the sim. There's no point risking real money, especially if you're starting from scratch. This drill, you can learn a lot just by trading on the sim. Of course, use a quality sim such as CQG or the TT sim, and there are others out there. Read the exercise instructions on the website, complete a trading session, and then we will review the session as we are going to just now. Okay, so in the review process, we encourage you to bring up a 1-minute chart with volume and your trades overlaid. So this is giving you a bigger picture perspective after the trading session of where you were working orders and getting fills in respect to volume and the price action. What we aim to get out of this is an idea of any rookie errors that we've been making, if we're consistently getting into the market early for any trade idea or late. Rookie sequences are an interesting one, and they're the main thing we want to try and rule out. And a rookie sequence means you're pretty much not trading rationally. Whether you're flipping ideas constantly or continually getting run over. For instance, if you're just obsessed with playing the market short and the market keeps going up and you keep trying to get short and puking out, those are the sort of rookie sequences that we talk about in the trading drill. Over trading, it's another one where if you look at your 1-minute chart and you just have a ton of trades, multiple trades per 1-minute bar, that's a sign of over trading. The trading drill goes into some detail of the particulars here. So what I've pulled up here is a 1-minute chart of the trading session just traded in the Bund. I've had to import these trades into a charting package. Just a quick review. So I took about 11 trades over 2 hours, which is a good number. This is actually a pretty good example because I traded pretty poorly in the early part of the session. I had a bit of a comeback. There's a good number of trades, a good distribution of trades. But let's have a look at the chart as per the instructions and see what we can improve on. So in this review, there's the first hour where I took all of my losing trades pretty much. And what I'm seeing from the 1-minute chart is there's not much volume for one. So I was obviously trading with less information than the second half of the session. For this swing here, I'm compulsively trying to get short. I go short for my first trade, looking for a breakout, cover my losses with a few ticks loss, and then immediately in here, I try and get short again. That's something I might want to look out for in the next session. I initially got short, was wrong, lost a few ticks. Why am I getting short straight away again? Not a serious problem, but perhaps there's a trend occurring there. Then I get short again at the top. I'm still obsessed with that notion that the market's going down. If you're not familiar with what we're looking at here, the down arrow is my short entry and the blue arrow up is my exit of that position. And then once again I get short again and take a loss right at the top of that swing. So that's 1, 2, 3, 4 trades short in that first hour. In my defense, I am getting short again at better prices to be getting short. For instance, I learnt my lesson in this first trade, got short, took a loss. If I was to be getting short again at that same price, I already have the knowledge that the market has traded 4 ticks higher just previously when I had to take a loss. A positive of this is that I'm working orders at better prices to be getting short, so higher prices. So a potential rookie sequence of trades in that first hour. That's where I took all of my hits, and we'll now take a look at the second hour where volume obviously in the Bund comes in once the stocks open up. So the first hour is traditionally low on volume other than the open. I take a short that I cover immediately here. Nothing wrong with taking a scratch. And then I flipped directions. Something in the order flow and DOM information has got me thinking now's a good time for longs, and that's actually a reasonable trade. Could I have held on to it longer? Yes. I believe my thinking at the time was, hell, I've taken 4 losing trades in a row. It'd be good to bag some ticks. And I think I took 5 ticks in that swing. Then there was a bit of absorption in this area here, and the market kept going higher, and I worked a short there, got filled and puked out of that position for a small loss. What I can point out is I've gone long, and then I've decided to play a short, thinking that the market's going to trade back down. But then I've switched again to a long. So there's a little bit of back and forth in my conviction there, which could be something to take note of for the next session. And then final trade, I take a scratch. This will be interesting to look at in the review. I believe this area here, there was a lot of games being played at the edge of the profile here, and I went in for a short, looking pretty good with a few ticks in my favor, and then a quick upsweep straight back to my entry price, and I was fortunately quick on the mouse then to scratch that idea, as if the sellers were in control at that point, the market shouldn't sweep up a couple of ticks so easily, in my opinion. And fortunately I scratched, because there was a big stop run or whatever went on in this big bar here, and the market swept up 10-15 ticks very quickly. I bagged a couple of ticks going with momentum there, and then very ballsily took a short at the top. Generally that's an improved sequence of trades in that second part of the trading session that I participated in. So when you're reviewing trades like this, hopefully you can remember a bit of detail about the trading session. It also helps to record video of the trading session, so you can quickly review how you are working bids and offers, and just take a couple of notes from this on things to improve on. My notes are flip-flopping my trade ideas. I was getting long and then short and then long. In the next session I should, if I'm thinking that the market's going to move up, focus more intently on working bids and getting a good fill in the long direction, and then patiently waiting for another long entry instead of switching to a short bias and then back to a long bias. And particularly from that first part of the session, note I was taking trades. I don't think there was enough volume confirmation for entering and exiting the market, and I took 4 shorts that were all incorrect. So mental rule for the next trading session: try an idea twice and then take a step back to the bigger picture as seen and observed in the DOM, and focus on a new trading idea. So that's the session. We'll do a separate video for those keen to actually see my ordinary trading for the session, pointing out things in the order flow worth paying attention to and forming a bias from. So that's the review. It shouldn't take more than 5 or 10 minutes, as long as you have a couple of notes of things you can improve upon for the next session, rookie errors that you can eliminate or focus your best on eliminating. This trading drill is worthwhile completing for a number of weeks. 2 or 3 weeks is a good period to really focus in on the DOM without any other information, and get a feel for your market if it's a new market, or get a feel for trading the order flow, and to really eliminate some of the common rookie mistakes that are in everyone's trading and honestly will continue to haunt you for the rest of your trading career. So hopefully not too much, but that's it. that was not a bad trading session for a demo. A good number of trades, some poor sequences of trades, some good sequences of trades. Actually ended up bagging 6 ticks for the session, which isn't anything to complain about. As I said, I'll try do a video of the entire session with some trades and order flow components pointed out. Thank you for watching.